The following video is an old one from a few months ago that was made for the Magic FX Academy members, and it details how exactly to refine down POIs using order flow. And it's pretty much the exact same way I do it in the Academy now, apart from we go even more in depth, but this basic method that is used is very powerful, and it still applies to everything. So take a watch and enjoy the following video. Hello guys, just wanted to get into a little trade recap to kick the weekend off. This is a trade from today, which is the 6th of May 2022, and on the 15-minute, the story we've built is we've tapped into a 4-hour supply that's at the extreme of the current 4-hour minor leg, and as you can see on the 15-minute, we've been very sideways. We've had a major break to the downside, followed by some minor structure, and then a major break to the upside, followed by another major break to the upside. So we had some bullish trending, but overall very sideways. And then, yeah, obviously we tapped into that 4-hour supply, and then we had a bearish major break, which then tapped into an unmitigated 1-minute demand down here, which pushed price all the way back up. Now, when we had this major bearish break, of course, we can put our premium and discount tool, as I've done here, got this, on the overall major range, which is from this high to this low. And in between that, we had minor breaks of structure. So if we look at the minor order flow, we've had a high, a low, that low's been broken. So first of all, we can separate that out as a minor leg. The low was cemented here. Did we ever mitigate this premium? No, we did not. So that's still open for business up here. And then what happened next? Okay, so we cemented this low here, price pushed up and then broke the low again. So a very fast leg of price here. So which went from this high to this low is where the low was cemented. So that's our next minor leg of price, and then that minor high was swept over here, and then the low broke again. So we've re-established order flow here, so we can delete this premium discount tool or take it off and apply it to this new leg, which re-established some order flow, meaning that this leg would be open for business. But what happened after that was that this premium was never mitigated, and then price continued down again. Okay, so this is another unmitigated premium, so the supplies in here are valid to take trades from. So again, keeping those open. Then we had this minor leg right down here, from here to here. And then price did react to something here and then go on, proceed to break structure again to the downside. But overall, this minor high didn't hold in the end, and we reacted from zone down here and we've pushed up bullishly. So breaking the overall major low, which was down here, what we might expect would be zones in this premium, the overall major premium, to work out. Now, how do we refine down zones in the premium? Well, we can look at the minor structure order flow within that premium to refine down zones again. So of course we had we would have had this zone here that is both in this major premium and this minor premium, and that obviously had a reaction which ultimately failed here. but you could have taken some trades here. And then there is another zone right here. Okay, so this is what we've currently tapped into, okay, which is a valid zone on the 15 minutes. Now what we want to do is refine down those zones on the 1 minute. If price came up here, obviously there would be, we'd look at these. So checking out our zones. So this was the one price reacted to before. And you can see if we looked at what price reacts to on the 1 minute, we can see there was a zone here that was left unmitigated. And if we, this was actually so as you can see here on the 1 minute, price broke structure here, mitigated something, broke down again. Sorry, hold on. Price broke down here. This is the low. This is where the low broke. Came up, mitigated something. Did it mitigate the premium? We're not sure yet. Broke down again, and definitely mitigated the premium of this leg. So we re-established order flow, and then broke down here. Okay. So what are we looking for? Okay, so within these legs, we're looking to refine zones. So if we take, for example, that first leg, the same thing we were doing on the 15-minute really. If we take this first leg, we can see we didn't get a mitigation to the premium here. So, you know, that is an unmitigated zone within this 15-minute. And then we break down again. We do mitigate the premium here and a valid supply zone. So we break down again. Order flow has been re-established here. So the zones in this premium are valid for an entry. Okay. So, and also, so it's about also narrowing down zones as well. So we've got this overall 15-minute leg here. Now, what zones in this 1 minute are also within this 15-minute? So we've got this zone up here that's a refined 1 minute zone. And we've got this zone down here, which is a refined 1 minute zone. And we've managed to say that we're not interested in these zones over here because order flow was not established here. This didn't mitigate a premium. So this premium's still open. And then this did mitigate a premium. So this leg doesn't need to be looked at anymore. Now, if we continue looking at price here, we can see in this leg, sorry, which would be from this high to this low, we can see that obviously here price did not mitigate this premium before pushing down again. Okay, then you can say, well, price did come up, sweep that, and then continue down. Okay, but when it swept that, did it mitigate a valid 1 minute zone? And you look to the left, and no, it's just mitigated imbalance. So the zones in this area are still open for business. That's just one of the little details to look at. So that makes zones in here still valid for entries. And now if we look to the left as to what we've tapped into, we've refined down these 1 minute zones. You can see that first zone is the first one we got a reaction to. So if we go on the 15-minute, it was this 15-minute zone, and that's that reaction to that zone. So, and it's what we're looking for, are reactions. When we can refine down zones in this way, there's a high probability that we'll get a reaction from it. So even if we just get involved on you get a change of character and take a trade from there, you know, on the 1 minute, a nice reaction with a 1 pip stop loss, you know, you can still get 30R out of that. So that's basically what we're doing. And now the second zone that we managed to refine down through looking at this substructural order flow, or that minor structure order flow on the 1 minute, this extreme here. Oh, this is a zone that we've just tapped into. Okay, so did we refine that down to a 1 minute zone? Yeah. Okay, so if we get a change of character from this zone, we can also look at getting involved. And right here, you see we had this inside bar, and we've broken below it. So right here, we can see we've got a change of character. Okay. Now, when we're looking at changes of character, what are we looking for? Well, usually what we want to see is for price to come back into the premium area. However, there are certain situations where price doesn't necessarily need to do that. I mean, overall, it's always preferable, but you sometimes get these flips. So you can see it on the 1 minute here. It's probably clearer on, say, the 30-second. You can see we had a little demand zone here. Price has had a reaction to that and then broken down. So this was our flip, and it's also what we would call a nice V-shaped recovery here for breaking down. So that's a great sign that price wants to move quickly. Okay. So if we now look at this, we could say this is our flip zone over here, and we can go to the 5 seconds to see if we get a tap into that flip zone. Price taps in on the 5 seconds, and we get a violent reaction. I say violent. Yeah, we get a solid reaction down, breaking structure on the 5 second. Okay. So what we would do is set some sort of entry here. Price was very volatile today. I was using slightly larger stop losses, so 1.5. And this trade actually occurred when I was making my lunch. It was kind of out of my session hours. So I didn't actually catch this one. I can't remember what sort of stop loss you would have needed to get involved in it. Would this have tagged you in? Possibly, barely. But yeah, that would be the trade. Okay, that would be the initial change of character trade right there. However, what we can also do is look for continuations. So our breaker structure would be this low here on the 1 minute. So let's see what happens next. Okay, we have our breaker structure. All right, now what do we want to do when we're looking at breaks of structure? Well, what we want to do is follow the order flow. Okay, now let me just take price back a little bit, actually, because we could have followed this order flow as it went. So you see this. First of all, when we're following substructural legs, we want to look at cemented lows. So our first cemented low would be this one here, because it's candle closed above. Okay, and then did we mitigate the premium of the previous leg? No, we didn't, in fact. So this premium still open for business. We've got the extreme, we've got zones here. Sure. So what we're looking for after that to be able to take continuations is a re-establishment of order flow. And now obviously we've had a another break right here. So let's see what happens then. Okay, so we have actually re-established order flow here within this substructure. So if I mark on the lows and the breaks like so, so if price breaks below here, that is a re-establishment. We want it to really close below there, but we've mitigated this premium and gone down again. So if we just follow the, still haven't closed below that leg, and then there we go. Okay, so we have now we've got this unmitigated premium, we've got a substructural low created that didn't mitigate, this high didn't mitigate this premium. Okay, then we broke down again, re-established order flow here, and then broke down again. So we have a re-establishment of order flow within this leg here. Okay, so what we're looking at now is both the overall 1 minute break, 1 minute major break structure leg, as well as the areas within that as well. And as you can see at the moment, this small area, this small bit of wick, is both in the premium of the overall 1 minute and this unmitigated premium based on the order flow. And then the leg expands, so this area also expands with it, expands a little bit more. So we wait until we cement a low. There we go. Okay, so this is our leg. So we have this zone right here, as well as potential zones here and at the extreme that we can look for entries from. Okay, so then we wait, and obviously also so that leg got extended as well. So this was the substructural leg. Okay, but would we be looking at this area? No, it's in the premium of the last substructural leg, but it's not in the overall premium after we've had the 1 minute break structure. Okay, we like that crossover. That gives high probability when there's a zone in both the substructural premium and the overall premium. Okay, that's what we're doing with refining these zones. And price comes up. Does it tap into our zone? Yes, it does. Okay, so we go on the 5 second. And what we have here, we have an example of an aggressive reaction on the 5 second. Like, so technically, what we want on the 5 second is a breaker structure, but sometimes you don't get a clear one on the 5 second, or a technical breaker structure would be classed as probably this point here on the 5 second. But when you get a reaction like this, a strong reaction, that is pretty much what we're looking for to happen. So we can certainly get involved in a trade from this when we've refined an area down so much like this. So yeah, it's a good example of that. So I was looking at 1.5 pip stops today. So this is what I would be looking at here as an entry. This is the one I took. Price came in a bit deeper. Could have had a 1 pip in the end. Then we got to risk free at that point. Okay, so 2 potential entries there you could have taken that were completely valid and high probability looking at these zones. Now you might be wondering what I'd be targeting. Well, Looking to the left, management wise, you can see what we had was a mitigation, a re-establishment of order flow here. And then another breakup. So we can assume that price doesn't need to come into any of these areas before continuing down. So we look for the last unmitigated discount zone, which was from it's here. This discount never got mitigated, so I just aim my first take profit at the discount zone here for about 17R. And then it quite nicely went all the way down there. And then I'll just show you what happened next. So we still had these extreme unmitigated areas. This is why it's a good idea to take partials, because price can always come back. And that's what it did this time. Yeah, you can see it perfectly came back straight through that area. But we got a tap into this unmitigated extreme, which was also a valid area for us when we refine it down. And there was an opportunity if you, it's the extreme. You could look at the 5 second if you wanted. If you were quite wild, you could pop an entry. Look, we've even got a 5 second breaker structure here. You could pop an entry up the top there, 1.5. And you can see, even though price is very aggressive here, it does actually come back and perfectly tap you in for an entry. Right there. Save my clicking finger. Which would have worked out nicely as well. Of course, this was an NFP. It is Friday. Spreads were a bit wide as well. Yeah, price came down pretty nicely. Tapped deeper into this unmitigated discount area. But yeah, who we don't really know what price wants to do from here. Came up again to the extreme. It's just kind of trickling around like it does on a Friday evening. And has that taken it out yet? Nope, still trickling. But anyway, that's current price now. So yeah, a few trading opportunities there from this afternoon, and you might want to watch that a couple of times. Talking about getting involved in mitigations, and it's the same thing again on all the time frames. The way we're refining, price is fractal. You can follow the substructural order flow within price or internal order flow, and look at that after we get the breaker structure to refine down your points of interest. So I hope that was helpful. Pretty big video really, but yeah.